Today, the Federal Open Market Committee decided to raise the target range for the federal funds rate. The economy continues to expand at a moderate pace. Solid income gains and relatively high levels of consumer sentiment and wealth have supported household spending growth. Business investment, which was soft for much of last year, has firmed somewhat, and business sentiment is at favorable levels. Overall, we continue to expect that the economy will expand at a moderate pace over the next few years.
The Federal Reserve is a very bad organization, a very evil entity. I think that most of the problems, most of the problems that we have can be laid at the foot of the Federal Reserve. I mean, not that the Federal Reserve acts, as the sole source of our problems, but most of the problems could really be traced to the Federal Reserve. And the Federal Reserve is certainly responsible for, I think, the degradation of the American economy, the artificially low interest rates that have prevailed, for most of the last probably 20 years. I mean, particularly the last 7 years, they're at zero now. But even prior to that, the Federal Reserve has been artificially suppressing interest rates, price fixing the cost of credit, with disastrous consequences for the real economy. I think as a result of what the Fed has done, the Fed has discouraged and undermined capital investment, savings, legitimate investment, production. And the other side, they have encouraged and subsidized reckless consumption, speculation. All of this has helped transform the American economy from an industrial powerhouse to the world's largest debtor nation. And we exist basically as this supposed consumer-based economy where all we do is buy things that are made in other countries and borrow the money in order to do it. And what the Fed has created in replace of the economy they've helped destroy is a gigantic bubble.
If they can't get Trump, if they can't take him down, and they have tried one thing after another to try
they're going to collapse the economy.
Is that okay? That's my question. What are they going to do?
They're going to wipe out the economy. They're going to hurt everybody. They're gonna well, housing is in a bubble. It's cracking. There's no doubt about it. I've been covering this at length. The markets are in bubbles that are truly epic. All of this is being supported on the back of a debt bubble. So that's what they're going to do, no doubt about it. If they can't get him in every other way, they're going to collapse the economy. Again, it's the central banks that already control it, and they don't care. The Wall Street banks as well. Just as I have outlined for everyone that I don't care which way this market goes. Neither does Goldman Sachs, JP Morgan, Morgan Stanley. You can go on down the line. They don't care either. Their traders are going to do exactly what I am going to do. That is, they are going to short the market. They're going to find opportunities to, as the market falls, that cash that's leaving is simply going to be transferred to, frankly, people like myself who work for the big banks. That understand what's going on and how to capitalize on this. This is how it's set up. They're going to bet against their own clients, and we're going to see a wave of wealth move from one group of people to another group of people. That's all that's going to happen. This is the setup that's been going on for a very long time. This is why the Federal Reserve has reinflated bubbles. This is why the Federal Reserve bought all of the mortgage-backed securities off of the big banks. Remember when they were toxic assets, Greg? Well, now they're not toxic assets anymore. Now they're worth something that the Federal Reserve has reinflated a housing bubble. Now they're going to dump their balance sheet. All those people that got kicked out into the streets, that money should be going to them. No, it's going to go to the Federal Reserve. It's going to go to the Wall Street banks who got bailed out. Remember, we supported all this. So whatever happens to us all right now, because none of us, so there were some of us like you and me and probably your listeners, who understood what was going on, but the general public allowed this setup to happen because they didn't open their mouths, and now they're going to pay the price and they're going to wish they did.
A stock market crash, I believe, is coming, but it's not going to be Donald Trump's fault. For example, in the second half of this year, if the stock market crashes, all the fingers are going to be pointed at Trump. But we need to educate people that the Federal Reserve has far more power over the economy and our financial system than presidents, than Congress, than anyone else. And during the Obama years, the Federal Reserve pushed interest rates all the way to the floor, as low as they could go. Well, Donald Trump can't keep the Federal Reserve from raising rates. If they want to raise rates, they know that's going to slow the economy down. They know that's going to hurt the financial markets, but they might want to do that to hurt Trump. Now, these booms and busts keep getting worse. For example, 2008, that crisis was worse than when the dot-com bubble burst. And this next one is looking like it's going to be a lot worse than 2008. And so what we need to do this time around, we need to say, hey, we've got to stop this madness. We need to tell the American people, no matter who is president, this is going to keep happening until we get rid of the Federal Reserve. So I'm going to make it my mission, and I'm calling on people all over the country. We need to not only just restart the End the Fed movement, but we need to abolish the Federal Reserve, do whatever we can. And that's one of the reasons why I'm thinking of running for public office. We need to do it all over the country. We need to get rid of the debt-based Federal Reserve, their debt-based currency, go to a new system, because if we don't, this is going to keep happening over and over again, no matter which political party's in control. Well, we'll see. I think that they're really targeting in the second half of this year and beyond for, if the economy turns down, that can turn a lot of people against Trump. I think that's what I think Democrats are secretly hoping that that's going to happen, so that they turn hearts and minds against Trump. And so they're really targeting the 2018 midterm elections really hard. The Democrats are right now.
Have you ever wondered why stocks just seem to keep going up, no matter what happens? For years, financial markets have been behaving in ways that seem to defy rational explanation. However, once you understand the role that central banks have been behaving, everything begins to make sense. In the aftermath of the major financial crisis in 2008, world central banks began to buy stocks, bonds, and other financial assets in huge quantities, and they haven't stopped since. In fact, as you will see below, central banks are set to buy $3.6 trillion worth of stocks and bonds this year alone. The Swiss National Bank owns more publicly traded shares of Facebook than Mark Zuckerberg does. And the Bank of Japan is now a top 5 owner in 81 different large Japanese firms. These global central banks are shockingly pumping up global stock markets. But because they now have such large holdings, they could also cause a devastating global stock market crash just by starting to sell off their portfolios. Over the years, I have often been asked about the plunge protection team, but the truth is that global central banks are the real plunge protection team. If stocks surge higher on any particular day for seemingly no reason, it is probably the work of a central bank, because they can inject billions of dollars into the markets whenever they want. That essentially allows them to play God and move the markets in any direction that they please. Of course, what they have done is essentially destroy the market. A free market for stocks basically no longer exists because of all this central bank manipulation. I really like how Bruce Wilds made this point. One indication of just how messed up and flawed the global markets have become is reflected in the way central banks across the world are now buying stocks. This has become a part of their response to correcting the forces of past excesses. Their incursion into the bastion of free markets signals we have entered the era where true price discovery no longer exists. The central banks are often viewed as price-insensitive buyers, so this incestuous influx of money is in some ways the ultimate distortion. According to Business Insider, global central banks are on pace to purchase an outstanding $3.6 trillion in stocks and bonds in 2017. Overall, the 5 largest global central banks now together have $14.6 trillion in assets on their balance sheets. This could be called a lot of things, but it certainly isn't free market capitalism. The Swiss National Bank is one of the biggest offenders. During the first 3 months of this year, it bought $17 billion worth of US stocks, and that brought the overall total that the Swiss National Bank is currently holding to more than $80 billion. Ever wondered why shares of Apple just seem to keep going up and up and up? Well, the Swiss National Bank bought almost 4 million shares of Apple during the months of January, February and March. And, as I mentioned above, the Swiss National Bank now owns more publicly traded shares in Facebook than Mark Zuckerberg. Switzerland's central bank now owns more publicly traded shares in Facebook than Zuckerberg, part of a mushrooming stock portfolio that is likely to grow yet further. The tech giant's founder and CEO has other ways to control his company. Zuckerberg holds most of his stake in a different class of stock. Nevertheless, this example illustrates how the Swiss National Bank has become a multi-billion-dollar equity investor due to its campaign to hold down the Swiss franc. It is now the world's 8th biggest public investor. Data from the official Monetary and Financial Institutions Forum show. If you think this bank is bad, then check out the Bank of Japan. It's even worse. Today, the Nikkei is essentially a giant sham. The Bank of Japan regularly goes in and just starts buying up everything in sight, and according to Bloomberg, they are on pace to become the largest shareholder in dozens of the most prominent Japanese corporations by the end of 2017. A top 5 owner of 81 companies in Japan's Nikkei 225 stock average, the BOJ is on course to become the #1 shareholder in 55 of those firms by the end of next year, according to estimates compiled by Bloomberg from the central bank's exchange-traded fund holdings. If global central banks have the power to pump up these markets, then let's not forget they also have the power to crash them. Why would they want to do such a thing? I can answer that question with just 2 words: Donald Trump. If the Comey angle doesn't work, the elite could try to destroy Trump by engineering an absolutely devastating stock market crash. Close to half the US population dislikes Trump anyway, and so it would be fairly easy to get them to believe that Trump's policies have caused a new financial crisis. It would be, however, complete nonsense. But in our society today, the truth often doesn't matter at all. And without a doubt, evidence continues to mount that the real economy is starting to slow down substantially. For example, we just learnt that bankruptcies surged once again in May. The following comes from Wolf Richer. So here we go again. Total US business bankruptcies in May rose 4.7% year over year to 3,572 filings, according to the American Bankruptcy Institute. That's up 40% from May 2015 and up 10% from May 2014. And there's another concern. Bankruptcy filings are highly seasonal. They peak in tax season, March to April, and then fall off. The decline in April after the peak in March was within that seasonal pattern. Over the past years, filings dropped in May, but not this year. Without unprecedented intervention by global central banks, financial markets would have crashed a long time ago. And if they keep increasing their purchases of stocks and bonds, the central banks may be able to prop things up for a little while longer. Who knows? Perhaps with enough financial engineering, they would be able to keep this bubble going for many years. Of course, things would start to get really awkward once they eventually owned virtually everything. But I have a feeling that things will never get that far. I have a feeling that global central banks will eventually find an excuse to start unwinding their balance sheets. And I have a feeling that it will be at a time that is highly inconvenient for President Trump. Whether it's your first time here or you're a regular, be sure to click on the red subscribe button and turn on the notifications tab to be one of the first to know every time we release a new video.